In this video, we're going to do the last statement, which is the statement of cash flows. So in the statement of cash flows now, we have to first finish the income statement, the statement of retained earnings, and the balance sheet. And now we do the statement of cash flows. When you're doing the statement of cash flows, you should use the steps to creating the cash flow statement. The chapter 16 handout on how to create the cash flow statement is going to help you, right? So what do we do first? We start with net income or net loss. So where do I get net income? I go to my income statement and I pull net income of $246,000. I bring that over. Next, on the cash flow statement, you add any depreciation, amortization, and depletion. You always add that. So I look to my income statement again and I see that I have depreciation expense of $2,800, and so I bring that over to my cash flow statement, $2,800. There is no gains and there is no losses on my income statement. So I look down at gains and losses, there is none, so nothing to bring over. Now I come to the part of the cash flow statement that's really challenging, which is the increases and decreases, right? So look at current assets, minus any increases in current assets except cash, add any decreases in current assets except cash. If you go to page 2, right, increases you subtract or minus, decreases you add. So current assets, you look for increases. If it's increases in accounts receivable, you subtract, decreases you add. Right, so let's take a look. I go over to my balance sheet. Here's my 2019 numbers. Here's my 2020 numbers. And I look for accounts receivable. Accounts receivable increased. So the difference between 154 and 131, that's the number that I use, right? So there was an increase. So I'm going to decrease cash flow by 123. All right. So here, the next one, I have 15,000 to 0. There was a decrease in inventory, so I'm going to increase inventory by 15,000. So the others is very similar. So here, I have a decrease in office supplies from 27 to 12. So that's going to be a positive 15,000 for office supplies on my cash flow statement. And you'll see that here, right? So decrease in office supplies, right, leads to a positive $15,000. So here, prepaid insurance from 67 to 11, it was $56,000. That was a decrease in prepaid insurance. And we look, decrease in prepaid insurance, $56,000. And then we look for rent, prepaid rent, 72. This was a decrease in prepaid rent, which is $52,000 positive. All right. So if it's an increase, it's negative. If it's a decrease, it's positive. And we're taking the change between the prior year and the current year. All right. Let's look at current liabilities. So what does it say? What does the handout say? It says for current liabilities, right? Review any changes in current liabilities, add any increases, minus any decreases. So if there's an increase, we add it. If there's a decrease, we subtract it. So I look at this, right? So here was a decrease. So here was a decrease of $127,800. So if it's a decrease, we subtract. Here we have another decrease for interest payable of $30,000. Another decrease, utilities payable of $19,000. Here we have an increase of $6,000, and for unearned revenue, we have an increase of $151,000. So if it's a decrease over the first three, accounts payable is a decrease, interest payable is a decrease, utilities payable, how am I getting the decreases? I'm taking the 2019 number minus compared to the 2020 number, right? So if I went from 130 to 2, 130,000 to 2,000, that's a decrease, right? So I subtract. From 30,000 to 0, that's a decrease, so I subtract. From 19,000 to 0, that's a decrease, so I subtract. And then salaries payable from 3,000 to 9, that's an increase of 6. From 29,000 to 180, that's an increase of 151,000. So I go to my cash flow statement and I put in decrease of 127.8 decrease of interest payable of $30,000, decrease in utilities payable of $19,000, then increase in salaries payable of $6,000, and increase in unearned revenue of $151,000. All right, and then I add from $246,000 all of these numbers. I add them all together, and I get my net cash provided by operating activities of $244,000. Okay, now I go down to investing activities. What does my handout say for investing activities? Right? Did long-term assets increase due to spending cash? Yes. Minus. Did long-term assets decrease due to receiving cash? Yes. Add. So if you come down to, for investing activities, right, long-term assets, sold long-term assets for cash, you add, or it's positive. Bought long-term assets with cash, you subtract. So here is all our long-term assets. Anytime we buy something, we're going to subtract. Anytime we sell something for cash, we're going to add. So to do this problem, we have to look at the actual bottom section here. We're only going to look at the current assets. So land is a current asset, long-term assets. Land is a long-term asset, furniture is a long-term asset, equipment is a long-term asset. Stock and dividends aren't. So it's just these three. So land was purchased for $130,000 in cash, that's going to be subtracted. Furniture was purchased for $60,000 in cash, that's going to be subtracted. Equipment was purchased for $41,000 in cash, that's going to be subtracted. If any one of these said that they were sold for cash, then it would be added. So anytime you have long-term assets, if you sell them for cash, it's a positive. If you buy them with cash, it's a negative. So it's going to be a negative 130 for land, negative 60 for furniture, negative 41 for equipment. When I go to my cash flow statement for investing, cash payment for the acquisition of land is $130,000. Payment for the acquisition of furniture, negative $60,000. Payment for the acquisition of equipment, negative $41,000. I add these three together and I get negative $231,000. So next I go to financing activities. And what does my handout say in related to financing activities? I can just look. Financing activities has to do with stockholders' equity and long-term liabilities. So for stockholders' equity, if we sold stock and received cash, we add. If we purchased stock with cash, we subtract. If we paid dividends with cash, we subtract. We don't have any long-term liabilities in this section yet. So the company sold stock for $290,000 in cash, that's positive. The company purchased stock for $200,000 in cash, that's negative. The company paid $226,000 in dividends, that's negative. So it's a positive 290, negative 200, negative 26,000. And so I go here, payment for the purchase of common stock, 200,000, right? We purchased common stock, negative 200,000. The sale of common stock, I received money, it's positive 290, and the payment of dividends, a negative 26,000. I add these three together and I get a positive $64,000. So now I have my cash flow from operating, my cash flow from investing, and my cash flow from financing. How do I get my net increase or decrease in cash? This is also the same thing as net change in cash. Net increase or decrease in cash or net change in cash. How do I get that? I take my operating activities plus my investing activities plus my financing activities. When I add those three together, I get $77,000. All right. My last step now is to check my numbers. So I compare the beginning cash balance and the ending cash balance. Where do I get these numbers from? I go to my balance sheet. The beginning cash balance is your 2019 balance, or the balance for the prior year, which is $199,000, right? And then my ending cash balance is the 2020 balance, so the balance for the current year, which is $276. This is my beginning, this is my ending. So the difference between these two should be the net change in cash, right? The net increase or decrease in cash. So beginning cash balance is $199. Ending cash balance is $276. The difference between these two is $77. I have a formula in here that checks this $77. Well, what was my net increase or decrease in cash? It was also $77, so I know I did it right. Okay, so my net decrease in cash is operating activities plus investing activities plus financing activities. I add those three together, I get $77,000. I check that by looking at my beginning cash balance compared to my ending cash balance. The difference between those two should equal the net increase or decrease in cash, which is $77,000, and it does, so I'm on the right track. And that is your statement of cash flows.